Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 14th of June. It's been another week of progress in the markets. There was a slightly higher than expected consumer price index reading in the States, but looking underneath the bonnet, that increase in inflation was largely driven by used car sales and increases in airline fares. That tends to play into the Fed's insistence that the inflationary situation we're in at the moment is fairly transitory. In fact, it did allow markets not only to rally, but the S&P 500 to close at a new record closing high. In terms of the UK, good GDP growth again, up 2.3% in April. Clearly, the economic clouds are starting to clear. The direction of travel is beginning to become established. Obviously, the April figure bolstered by the fact that there were further easings of lockdowns, particularly in hospitality and non-essential retail. That's been pretty good for sterling, and also the domestically focused FTSE 250, which in the year to date is currently up about 10%. So bearing all that in mind, the year-to-date figures are also moving ahead for the major indices. The Dow Jones is now up 12.6% in the year-to-date, S&P 500 up 12.9%, the Nasdaq continuing its recent return to favour as inflation worries have slightly receded. It's up 8.8%, and the FTSE 100 up 10.3%. Turning to next week, there's a few companies of note to keep an eye out for, all first quarter reports, the first one being Tesco. Obviously, we'll be looking to see how their trading has been going more recently and their general market share. On top of that, how they've been able to further ramp up their online capacity, something that they were very much focused on last time we heard from them at their full year results. With its newly strengthened balance sheet and a dividend yield of around 4.4%, investors will be expecting big things as usual from Tesco. Also, a trading update from Whitbread had a bit of a recovery. The shares were up about 31% over the last year. Obviously, this is the premier inn owner. And what we'll be looking for here is the kind of figures it's previously mentioned, whereby it needs around 55% occupancy in order to be breaking even. Obviously, in terms of the pent-up demand and the likelihood of further UK staycations, it could well be that this is a fairly upbeat assessment from Whitbread when we hear from them next week. And finally, Boohoo have also got numbers. The share price has been rather less successful of late, down around 13% in the last year or so. Obviously, the recent integration of the likes of Debenhams and Dorothy Perkins, it'll be interesting to see what sort of contribution those are making in their early stages. By the same token, whether there's been any pressure on margins. Obviously, it remains a very competitive space. And finally, online trends, in as much as with physical stores now reopening, has that been putting pressure on general Boohoo profits? Thank you for watching. Have a great week.